So good morning. I trust everyone is well this morning. As we start our webinar today, we can begin with a word of prayer. Our Lord our Father, I come before you this morning. We give you thanks for the gift of this new day and the gift of life. As we begin this webinar, we pray that you may be together with us. Guide us and protect us. Give us knowledge and understanding. In Jesus' name I pray and believe. Amen. So you can confirm if I'm audible enough in the chat box and if you can see my screen so that we can begin. Can we confirm if you can see my screen and if I'm audible enough? Thank you, Janet, for confirmation. So as we begin, in case of any challenge, kindly type in the chat box so that we can address that. And also in case of a question, type in the chat box and my colleague will be responding to you. So today I'm the one who will be taking over the masterclass, the webinar on behalf of Madam Regina Mirinditi, part of LWK Africa team. So our webinar today is on the taxation of SACCOs and microfinance. So for the content, we have the introduction, the overview of the cooperative societies, since the SACCOs fall under that category, taxation compliance, e-teams, tax audit, tax dispute and resolution, emerging issues in taxation. And we begin by a phrase that we have about tax certainty, that in this world, nothing is certain but death and taxes. So whichever time we are or at what point we cannot avoid tax. So tax is the same, so tax and death are certain. So in the introduction of the cooperative society where the SACCOs and the microfinance fall in, we have an aspect of the mutual trading. That is what we'll start by looking at. Mutual trading, just like the name suggests, the mutual. So it is whereby people in the business or those that are trading, they fall under the same category or they are related. In a SACCO or a society, you find that the members in there, they are related. They have the same objective or the purpose in forming that SACCO. So that's where the mutual trading applies. So it's as in customers are the same or are related, but that will mean the purpose of that that business or the purpose is the same, both for the entity and the members in there, whom that we refer as customers. So the transactions between the organization and the members, the transaction is exclusively between the organization and its members. So in a SACCO, the members of that SACCO. So any transaction taking place, it's between the SACCO itself and the organization and the members. And the purpose is to serve the needs of the members. Like the basic, we know for the SACCO, we deposit and get loans. So as members, our needs is to get the financing. So the organization is serving our needs by giving us the financing, maybe at an interest or at no interest, depending on the nature of your organization. So under the mutual trading, we have examples of those organizations. We have the mutual insurance companies, cooperative societies, member clubs, and the trade associations. All these are formed with one purpose, and the transactions is between the organization and the members in there. So from this aspect of the mutual trading, the profit that arises from the transactions, they are not chargeable to tax. They are exempted. So the profit that you obtain at the end of the year or the accounting period, it is taken back into the organization to be utilized in the following period. So it is exempted from tax. So we have the overview of the cooperative society. So for the mutual trading, we wanted to get a better understanding of what will happen in the SACCOs or generally the cooperative societies. A cooperative society is an association formed by person with a common purpose, whereby they come together, they put their resources together, and they want to benefit or to develop. Different people come together, they put their resources together for their own benefits. So that's what we refer by a cooperative society. So the main objective, it is to organize and promote economic interest of the members. So the members in there, they have the main objective of the purpose of forming that to develop themselves economically. They want to, for example, we have the cooperative societies formed by the farmers dealing with dairy products. They are coming together so that they can get a market to sell their product, and by that, each member there is going to develop economically through the sales that they are obtaining from the sales of their product. So the cooperative societies, we have different values and principles that govern the operations. For the values, we have the self-help. So by self-help is whereby the members themselves, they are coming together so that they can benefit themselves either economically or socially. Then we have the mutual responsibility. The members in the SACCO or in the organization, they are the one who are responsible in making decisions. They participate in making decisions, and any governance of the SACCO, they are the ones that come up with the rules governing that SACCO. And in any other decision that they need to make, maybe for a financial decision, it will come from the members. So it's the responsibility of the members in that association to participate in the decision-making processes and even to come up with the rules that will govern the SACCO. We have the other value as equality. This is whereby by equality we mean that every member in that SACCO is treated equally or fairly. Every member is treated equally. You are expected to take that responsibility of making decision. You participate in making decision of that association. Then we have equity. Under equity is whereby any benefit that is coming up is distributed equally among the members, depending on the contribution that they have made. Maybe in that, depending on that shareholding, the benefits that will come will be divided equally, depending on the contributions that you have made. Each benefit that will arise from that association, it will be distributed among the members with fairness. Then we have honesty. So members of the society, they uphold the honesty value. You need to be honest in your dealing, uphold integrity, so that you can promote in building the trust among the members, among yourself. Since you are the one who are dealing a minute. So apologies for that. I've shared my screen. So kindly confirm you can see my screen. Okay, thank you, James. Okay, let's proceed. So So maybe I can take you back a while for those who had missed the notes. So we have started with the mutual trading. I've talked about the mutual trading. I've explained what it is and the examples. Then we have moved now to the, so under the cooperative societies, I've explained what the cooperative society. It is an association whereby the members come together and they pool their resources together with a common objective. Then we have the values that are governing the cooperative I was explaining. For the values, we have the self-help. I've talked about the self-help. This is where the members individually, they want to develop themselves economically or socially. Then we have the mutual responsibility is another value. So it's the responsibility of every member to participate in the decision making of the society. We have the other value as equality. The members of the SACCO are treated equally. You have equal rights and responsibility as a member of that SACCO. Then you have the equity as another value. So under the equity, I've said that any benefit that is coming up from the association, it is distributed fairly to every member of the society. Then we have honesty. Honesty is whereby we uphold the integrity in our dealings or every transactions happening, so that we can promote our trust among the members. We have openness. We expect to have open communication between the members in the society for better decision making, so that each member can receive information in the association. All the information is made available to all members. The last value is the social responsibility. It's the responsibility of the members to ensure that the society in which they are operating, it's their responsibility to maintain all that, to have a positive impact in the society around them. So among the values that are governing the societies, then we have the cooperative principles. So they are different between the values and the principles. Principle number 1, we have the voluntary and open membership. So by that we mean that any person is allowed to be a member of an association. There is no restriction. The society is open for each and every member to join. We have democratic member control. So the members of association are the ones that are taking control of this association through participating in decision making. So we don't expect an external party to come and take charge or take control in a cooperative society, but members in there are the ones that have the full control to make the decisions, to come up with rules and regulations we follow. We have another principle, that is economic participation of members. So every member, they contribute to the development of that cooperative society. When it comes to the capital, they contribute fairly, depending on by contributing to that society. We have autonomy and independence. By that we mean that as a society is independent, it is not governed by an external party or investor. So it is independent as an organization in its undertakings. So no external party will come to control the society. We have education and training and information. Under education and training and information is whereby the leadership of the they can train the society so that they can get to see the benefit of that circle, so of that circle society, so that any But as a principle governing the operations of the cooperative, they have to be cooperation or better interaction between different cooperatives. Then the last one is the concern for community. So the community in which that you are operating within, it's your responsibility to make sure that there is positive impact towards that community. So basically, those are the values and the principles that are governing the operations of a cooperative society. The next item is the types of the cooperative societies in Kenya. So number one, we have the SACCO, that is the Savings and Credit Cooperative Society. So for the saving and credit, the purpose is to provide financial support to members. So by that is where you deposit money, then you get you are granted loan at a reasonable interest. So you receive financial support as members through the deposits and by receiving loans from that society. Then we have housing cooperative society. The purpose of the housing, it is to provide residential houses to members. So members of that society, so they put their resources together. At the end of the period, you're going to get a residential house. So as the name suggests, for the housing, the purpose is for providing houses to their members. So issue that is happening. Apologies for that. So we can proceed. I've shared my screen under the types of cooperative societies. You can confirm whether it's visible on that section under the types of cooperative societies. David, we have addressed the issue of network. We have changed. So I hope that it will be smooth. So you can confirm whether you can see the types of societies. That's where we are. No confirmation. Anyone that is seeing the screen under the types of cooperative societies, so that we can proceed. Okay, thank you. So apologies for that. So for the types, we were talking about the different types of cooperative societies. And number one is the saving and credit. So the purpose is to provide the financial support to members. You deposit your money there, then you can give a loan from that SACCO with an interest rate at the end of the period. And that interest is the income that is going to be recognized by that SACCO. Type 2, we have the housing cooperative. This is aimed at providing residential houses to members. So the members come together, they pool their resources, they acquire land, and they construct houses to be given to the members. So as the name suggests, for the housing, the purpose is to give houses to the members. Then we have the consumer cooperative societies. For the consumers, it is formed to protect the interest of general consumers by ensuring that consumers of different products, they receive this product at reasonable prices. So So type C is the consumer cooperative societies. So the purpose of these societies is to ensure that consumers, they are getting goods at reasonable prices. So the society will get goods direct from manufacturers and distribute them through agents so that the final consumer can receive goods at a reasonable price. So type number 4 of the society is the agricultural or marketing farmers cooperatives. So the purpose is to support the small scale farmers, to enable them to market their products and enjoy the benefits like the large scale farming members. So the purpose of the agricultural is to support the small scale farmers to ensure that their products are marketed and sold out there so that they can enjoy the benefits. Then we have the producer cooperative societies. They protect the interests of small producers by ensuring that they get raw materials at reasonable prices and when they need. They make sure that the members who are small producers, they have the raw materials at their disposal, and also they can acquire them at favorable prices, and even the tools and machinery that they require in the production of their products. So basically, those are the different types of the SACCOs, of the cooperative societies. We have the SACCO, housing societies, agricultural, consumer, and the producer. So we have 5 types of cooperative societies. So we move to the next item is the presentation and disclosures in financial statement of SACCOs. So I hope my screen has moved. So yeah, so the next item is the presentation of the financial statement. So the SACCOs, they present their financials depending on their nature, not their functions. Like for a normal company or a limited company or a business, our financials, we present them by the functions. For example, we have under the expenditure in the financial statement, we have the operating expenditure, the financial expenditure, and the administrative. So that one we refer to that as category by function. But now when we come to the SACCO, it is classified by the nature of that SACCO. Another point to note, under the SACCO, you need to disclose any specific contingency which is included, including the balance sheet items. Maybe you have your assets that you have taken as a security in a financing. So you need to make sure that you have disclosed any contingencies that you have. From the financial performance of SACCOs, we have different risks which a SACCO face and needs to be disclosed. In case your SACCO, in the process or in that accounting period, you have faced any risk, you need to disclose that in your financial statements. And we're going to look at the different categories of the risk. Number one, we have the credit risk. This is whereby the members default on loans. So we have said for the SACCO, it's formed for the accepting deposit and granting loans to its members. So when the members default on these loans, that one is a credit risk, and it will affect the overall performance of the SACCO. So they need to disclose in case they are being affected or they are facing this risk. Then we have the liquidity risk. You cannot meet the short-term financial obligations. By this, the current assets that the SACCO has is way lower than the current liability that they have. They cannot be able to meet those short-term financial obligations. So they don't have enough cash flow at their disposal. So making it difficult to meet those short-term obligations, those liabilities which should be met within a period of 1 year or less. So that one is a liquidity risk. We have a market risk. Market risk is whereby there is fluctuations in the interest rates, thus affecting the profitability, because we have said like the interest that the SACCO will get from the loans that they have granted the members, that's their income. So when the interest rates are lower, the profitability will also be low. So that one is also another risk, and it needs to be disclosed in the financial statements. We don't have effective internal processes or systems in the SACCO. Reputation risk, there is negative publication concerning that SACCO out there. So at the end, due to the negative publicity, the reputation will be affected, thus affecting the overall performance of the SACCO. Because no person will be interested in joining a SACCO which has a bad reputation. We have the solvency risk. You cannot be able to meet the long-term obligations due to accumulated losses. So we have the short-term obligations and long-term. If at all you cannot be able to meet the long-term obligations, that one is a solvency risk. Then we have the regulatory and compliance risk. You're not complying with the government rules, the regulations, the SACCO laws, and the financial reporting standards. So for this financial presentation of the financial statements, we need to follow the IFRS. So non-compliance to those standards is also another risk under the regulatory and compliance risk. So we have those 6 categories of risk which affect the SACCOs, and they need to be disclosed in the financial statements. The next category is the structures of the cooperative. So we have at the top, we have the apex society. So that one is where is formed at the national level. So at the national level, we have the apex societies, and it is in charge of the overall interest of all the cooperative societies, which are both locally and international. So the apex is the topmost in the structure of the cooperative movement. Then we have the cooperative union. The membership is restricted to primary cooperative societies. So the next is the primary, which is restricted under the cooperative union. So by the primary cooperative, this is whereby it's only applicable for individual persons. No company can join that cooperative society, just individual persons. So we move to taxation of the cooperative societies. And the taxation, it is taxation of the SACCOs. It is governed by Section 19A of the Income Tax Act. So to get a better understanding of the taxation of the SACCOs, we need to get the Income Tax Act, Section 19A, cap for 70. So you get the basis for taxation of the cooperatives and the SACCOs. So for the taxation, two things are taken into account. That is the two features have the body existence. This SACCO is an independent person. It's an independent and it has its own existence. Then the other feature, how it generates income. So we have different categories of income. We have the interest and any other income. If a SACCO is being engaged in any other commercial activity, it will generate income. So those are two features that are considered in taxation, the body corporate and the income generation. So under the taxation of the cooperative, we have three categories. We have designated cooperative societies, we have designated primary, and the SACCOs. So we're going to take on the SACCOs. The designated primary, we have said they are restricted to individual persons. No company can join that membership. Then we have the others under the designated cooperative society, any other apart from the primary societies. So for that, taxation of those three categories, we have some exemption, whereby we say that it excludes a society which has been exempted from all provisions of the Cooperative Society Act. So the same way that you find that there is tax exemptions for limited companies, it will still apply in this case. If this society has been exempted from all the provision, it won't be considered in the taxation. Then we have a society in commissioner is of opinion, it's a body corporate carrying on business for its own profit. So we have said for the purpose of its formation is to benefit the members and the organization there, and that the profit that is realized is tax due to the mutual trading aspect. But now when it comes to a point where this society is engaged in another activity that is generating profit for its own purpose, not to benefit the members, it will be excluded from the taxation, from this nature of taxation. So we can check on the different definition. We had three different categories under the societies. We have said about the designated cooperative societies and the primary society and the SACCO. So the designated cooperative society, they are cooperative society registered under the Cooperative Societies Act. So the Cooperative Societies Act is the one that is governing the operation of this society. Then for the primary, it's still under the Cooperative Society Act, but the membership is restricted to individual persons, no corporate that will get into that primary society. Then for the SACCOs, they are under the designated primary societies. So as we check deeper on the taxation, so the taxation is on the income. So we check on which income is taxable and how to obtain that taxable income. So we get the total income generated for that period. Then we less the bonus or interest. And this interest that we deduct, we can term this as an expenditure. It is the interest that is accrued on the deposits or the savings of the members. So that one is an expenditure which will be allowed, it won't be taxed. Then we have dividends declared. So at the end of the accounting period, the societies or the SACCOs, they give dividends to their members. So they will be excluded from taxation. Also to note, any bonus, dividend, or interest that you give your members, it should not exceed the income that you received for that accounting period. So, for instance, for that year, you have 10 million. Make sure that the interest and the dividend you have, they should not surpass the 10 million income that you have. So, to determine the taxable income, we have the income that you have generated. You deduct interest, bonuses, and dividends. So you get the taxable income. The same will apply to the primary societies. The only difference that we have seen under the primary society, it is applicable to individual persons only. But for the taxable income, it's the income generated. You deduct the interest and dividend declared and distributed to its members. So once you are allowing this dividend, they must be distributed to the members. Still on the dividend, so for a society to pay their members interest, bonus, and dividend, they need to note this point. So any bonus or interest that you have paid to your members under the Section 3 of the Income Tax Act, it is considered to be payment of dividends for the purpose of taxation. Any bonus, it is considered to be a dividend you have given the members. So dividend can be either in cash or share dividend. So you can receive cash at the end of the period as a dividend, or your shares, you can receive them in share form and increase the value of your shares. For the dividend, you need to withhold tax. So apart from the income tax that you do at the end of the year, we have the dividend that you have distributed to the members. It is subjected to withholding tax at a rate of 5%. So make sure that when presenting the financial statement, you have a dividend. For example, you have 10 million dividends that you have distributed to the members, and you are presenting that finance statement to KRA. Ensure that you have paid withholding tax on those dividends. So that was the brief introduction of the cooperative societies and the taxation, how it is done. Now we move to the taxation compliance aspect of it. So compliance, it is whereby but a taxpayer, either an individual or even the SACCO itself as a corporate, it is adhering to the tax laws and regulations. So we have different aspects under the tax compliance. Number one, we have accurate reporting. These financial statements that you have prepared, are you doing them accurately? By that, you fall under the tax compliance. Are you doing them on the given timelines? We have different timelines or deadlines. By observing the timelines, we are being compliant. We have the payment of taxes. Any tax that will accrue from the operation of this society, have you paid that to KRA? Failure to pay that, you are not compliant and you cannot get a compliance certificate. Then we have keeping of records. Have you maintained all the records to support every transaction happening in the society? Then understanding the tax obligations. Every taxpayer has different tax obligations. We are going to protecting SACCOs and microfinances. Then we have the other aspect is ethical conduct. So those are the aspects that can be used to measure your tax compliance as a taxpayer, or rather in this case for the SACCO of the society, how tax compliant are they? Those are the aspects that can be used to determine that. We have key tax compliance guidelines. Number one is understanding, thorough understanding of your business tax obligations. We're going to see the different tax obligations affecting the SACCO. So you need to have a better understanding of those obligations. Know what is expected of you under each obligations, the timelines, everything that is under that obligation. Then we have maintaining accurate records. Every record supporting every transaction, you have those records maintained in your company or in your organization. Ensure timely and accurate filing of returns. Every obligation that you have, it has different timelines. Ensure that you have done your return accurately and file them on time. Explore legitimate tax planning strategies. So we have different tax planning strategies under the different tax obligations, ways in which that you can use to minimize the tax, but being legally, you're not avoiding to pay tax. It's the minimum that is appearing in your organization, but bring it manner. You need to engage a tax professional or a consultant to ensure that you are fully tax compliant. Regularly check any communication from KRA, and you need to stay updated on the changes that are happening, the different tax changes that are happening. Make sure that you are updated, and you have any communication that you have received from KRA, you have it and you have responded appropriately. Then the other guideline is responding promptly and accurately to KRA. So every time KRA wants to either audit that society or that microfinance, they will communicate through the registered email. They'll send an email showing what they want to do and the documents that they need. Once you receive that communication, you need to respond on time and accurately to them. So we have the different tax structures. I believe we are together. My screen is moving. So on the different structures, we have the pay-as-you-earn, withholding tax, corporation tax, and the VAT. So for the pay-as-you-earn, in these societies and the SACCOs and microfinance, we have employees. So as the employer, the organization is the employer, you have the responsibility to deduct pay-as-you-earn when paying the salaries to employees and remit that to KRA. So that one is a tax that is subjected to employees' salary on a monthly basis. And it's the obligation of the employer, not the employee. The SACCO itself or the society is the obligation to deduct and remit to KRA. The taxes are computed on a graduated scale. So we have different rates, and the minimum being 24,000. So any person earning 24,000 and above, they'll be taxed to pay. But if you are earning 0 to 24,000, you don't have any tax to pay. But it's good to include all employees, even if they don't reach the 24,000 threshold. Ensure they are included in the pay-as-you-earn returns. Because at the end of the year, the salary and wages that we are going to claim as an expense, it should be corresponding with the total pay-as-you-earn that you have filed for that year. So every employee should be included in the monthly pay-as-you-earn return. We have a penalty of 10,000 for late filing. So the deadline for filing pay-as-you-earn is 9th. Late filing, you have filed your pay-as-you-earn on 10th. There is a penalty of 10,000. Still under the pay, we have a personal relief of 2,400 per month or 28,800 per year. This relief is given to aid in reducing the tax liability. It is reducing our tax liability at the end of the month. So make sure when we are doing the personal relief, the pay-as-you-earn, you have captured the personal relief on each employee. So for SACCOs and societies, they are expected to account for pay-as-you-earn and withholding taxes like any other taxpayer. There is no special provision. Even for the SACCO, make sure that you have the pay-as-you-earn obligations and you have remitted on a monthly basis. So when it comes to KRA, when you talk about the KRA audits, when it comes to the pay-as-you-earn obligations, they have their point of interest. What do they check in the pay-as-you-earn? We have the committee allowance payment. So the committee of that SACCO, they have met and they have received the allowance for that meeting. Is that allowance subjected to pay-as-you-earn? So it is expected that any allowance that is paid to the members, it should be included to the pay-as-you-earn. We have the payment of bonuses to staff or the board members. Any bonus that you give your staff, just like the normal companies, any bonus that you give to your staff be included in the pay as you earn. So we should be having the basic salaries, the allowance, the bonuses, then they are being subjected to pay as you earn. Then you have motivational payments made mostly on recruitment of new members. So any other payments that you have given to your members or the committee, apart from the basic salary, it should be subjected to pay as you earn. So that one is a point of interest when KRA are reviewing these returns that we do. The other obligation affecting the SACCOs or the societies is the withholding tax. So withholding tax, it is deducted at source. So we have different categories under the withholding tax. We have the professional services. We have talked about the dividends that you give to your members. It should be and paying to the professional services, 5%. In case you have engaged a contractor, the contractual, there is also a withholding for the contractual engagement, which is 3%. It should be given to KRA. So make sure that any success is done. And for the withholding, you have 5 days after the payment to make sure that you have withheld it. Remitted to KRA. The basic purpose of the SACCO, it's the income generated is from the interest, and the interest we said is it is exempted from taxation. But you find in different times the SACCOs of these societies, they have engaged in any other income. Maybe you have rental properties and you are receiving the rental income. You have any other investments. So at a time whereby this SACCO, they have engaged in a commercial activity where they supply taxable services or goods, they need to charge VAT. So if you have engaged in any other activity, note that you need to have a VAT obligation if that activity relates to taxable services or goods. And for the VAT, it should be done by 20th of the following month. That's the deadline. And we have a penalty for late failing. So if you file after 20th, there is a 10,000 penalty. If you properties, farming, is the corporation tax. We have the corporation tax. That's the income tax at the end of the year. So for the corporation tax, so for the corporation tax at the end of the year, so you can find that in the Income Tax Act. So, and the SACCOs, they are liable to pay tax on income derived from non-members and also mutual income. So at the beginning, we talked about the mutual trading aspect, but in case this SACCO has non-members, so any income derived from non-members or any transaction which is not under the mutual trading aspect, it is subjected to tax. The income of SACCOs is calculated. Yes, we talked about that, whereby we said income, then you deduct the interest, bonus, and the dividend. But now, which income is subjected to taxation? We have 50% of the gross income from interest for non-members. So for the members, note that the income generated from the members, it is exempted. But for the non-members, 50% of that income is subject to tax. So that one is the taxable income. Then we have rental income. I've talked about having any other commercial activity. Maybe you have rental properties. That income that is issued under the transfer of properties invested in farming, any other investment, or you have any other trade, any other income apart from the core business of this SACCO, it is subjected to taxation. That income you're deriving there is the taxable income. So we have talked about the interest from members. That one is exempted from taxation. So under Section 19, all expense which are wholly or exclusively incurred in the production of rental income are allowable. So you have the rental properties. You want to declare that income, any expense that you have incurred is allowable and should be deducted before you arrive at the taxable income. SACCOs are taxable separate from the rental income. So even this SACCO society, you have different activities. There is the company, and we have maybe or farming. Each category it should be reported separate the tax filing for the company. We know we have the visual picture of that template. So it has different categories will apply for the SACCOs. The core business, you present that independently. Then for the rental, you do that on its own column. Then the farming on its own column. Because each activity has rental income you have, but in the farming, you have a profit. So each activity, it should be taxed differently. The other obligation is the capital gain tax. So the capital gain tax, it involves the transfer of property. So you have transferred property from person A to person B. So the gain that you receive from that is subjected to tax. And this tax is paid by the transferor. The person selling this property, you're the one to pay the capital gain tax. We have a rate. The rate is 15% of the net gain. And by net gain, we mean the gain that you have received from the sale. You deduct any expenditure that was incurred in that process. Also, for the capital gain tax, it's a final tax. By final, we mean once you have subjected that to 50%, at the end of the year, you don't have to subject that income again. So it's a final tax. Once you have done that taxation and you have paid the 15% at this point of the transaction, at the end of that period, you don't need to declare it again. So the net gain is the sales proceed, you less the acquisition and the incidental cost. You have the legal fees. Maybe you have developed that property from the time that you acquired. Any cost that you have incurred is deducted. So we have examples of those expenditure that you need to allow or to deduct when determining the net gain. You have the cost of acquisition. Maybe you are selling land. How much did you acquire that land? That cost is an allowable expense. We have loan or mortgage interest. You have a mortgage and you are paying interest on a monthly basis. So that interest is also allowable. Cost of advertising to find a buyer. Then we have the cost incurred in valuation of the property. In the process of selling, you need to involve a valuer to determine the value of that property at that point. So that cost that you have incurred is exempted, is allowable. You have the legal fees and the cost of enhancement. Any development or improvement you have made on that property is also allowable. I believe we are still together and you're asking your questions in the chat box. Continue asking your questions in the chat box and you're going to get responses as we proceed. So the next obligation is the stamp duty. The stamp duty is in a way related to the capital gain tax. For the stamp duty, it's the tax that you pay for the transfer of that ownership. The only difference that happens here, the stamp duty is the buyer who is paying that, but the capital gain is the seller. The difference. You can pay 4% of the value of that property. If it's in the rural areas, the stamp duty is 2%. So those are the tax rates for the stamp duty. And to note, the buyer is the one who is paying the stamp duty. So the only difference is between the buyer and the seller, between capital gain and the stamp duty, and also the taxation rates. And also for the stamp duty, it's based on the value of this property, not like the capital gain tax, whereby we get the net gain. In this one, it's on the value of that property. So as a buyer, you need to pay 4% of the value of that property as stamp duty. The other obligation is the rental income. So under the rental income, we have two different categories. We have the residential and the commercial. So for the rental income under the residential, is the tax that you pay on a monthly basis. This is the monthly rental income. That rent that you have received for those residential properties, you pay 7.5% of it to KRA, and you are not supposed to deduct any expenditure. So, and for this case, for the residential properties, we have a limit. If the income is and 15 million, you fall under that category. If your income surpasses the 15 million, you are allowed by the authority to subject that to the normal taxation that we do at the end of the year. Maybe for a company, that is 30%. For an individual, we use the graduated scales, like for the one in the pay-as-you-earn. So that one applies for the residential properties. So if a SACCO or this society, you have rental properties and you are receiving the income, make sure on a monthly basis, you subject your income to 7.5%, and you pay that to KRA. Then for the commercial property, those ones are subjected to VAT. So we have talked about the VAT. So if the rental properties that you own, they are under the commercial properties, you should be declaring that income under the VAT on a monthly basis, and it is subjected to 16% VAT. And for the rental, it's among the other commercial activities which are subjected to tax under the SACCOs and societies. So don't ask why we are covering the rental, yet we are dealing with the SACCOs, because the SACCOs, you can find that they have any other activity like the rental income. The next item that we are going to handle is the items. So for the items, I believe we have come across items, maybe when we are purchasing goods, or even when we are selling our product or services, we are using the items. But in this case now for SACCOs, how do they need items? At the point whereby they engage in any other commercial activities, like the rental income, farming, any other trading, apart from the core business, they should be having an items. Invoice management system. So this one is developed so that it can help to transmit tax invoices to KRA on a real-time basis. For example, for the rental income, you have received that income. Make sure that you provide an invoice to the tenant. And once you provide that tax invoice using the items, it will be transmitted to KRA on a real-time basis. So at the end of the month, or when coming to file the VAT on 20th, KRA already has that record with you. Each transaction that you did for the sale or for the purchase, it was transmitted directly to KRA, and they have that data on their database. So eTeams, it is a software solution for tax invoicing. So majorly it is for issuing tax invoices to customers. So who is required to onboard eTeams? Every person carrying out business in Kenya, either you have VAT or you don't have VAT registered, you should be issuing the eTeams, because KRA expect each and every expenditure that we claim at the end of the year when submitting our returns, it should be supported by a valid eTeams invoice. So even if you don't have the VAT registered obligation, make sure that any invoice that you are giving to a customer, it should be under the eTeams. Still under the eTeams, we have some exemptions. Not all expenditure can be supported by eTeams. So there are exemptions whereby KRA do not expect you to support that claim with an eTeams invoice. Number one, we have the emoluments, you have the salaries and wages. So once you pay your employees their salaries at the end of the month, they don't have teams to issue you for that invoice, for that transaction. So that one is exempted. Then we have import. Department. So that data will be captured there and KRA will get that record. So the same way when you're doing a sale transaction, it will be transmitted to KRA. Even at the custom, any import that you receive, it will be handled at the customs, and that data will be transmitted to KRA. Then we have the investment allowances, interest, and then air passenger ticketing. In the SACCOs, we have that interest that we are receiving as income. So that one is exempted from the eTeams. So we can check on the different eTeams solution. So we have different eTeams solution. As we said that it is a solution developed to transmit or to facilitate the tax invoicing. We have different solutions that you can onboard on. Number one, we have the eTeams Lite. We have the web form. The web form, you can access that through the eCitizen portal. I believe everyone has an eCitizen account. So through that, you can register for the eTeams and be able to issue an invoice to your customers. But for solution or this form, it needs a taxpayer with minimal transactions, not bulk transaction. Maybe you can find those taxpayers with 2 or 3 invoices per month. You can use the eCitizen web form. Then we have the eTeams Lite, USSD. You just dial *22# in your phone, and you're going to register and issue the eTeams invoice to your customers. So whichever is favorable for you, then you have the eTeams portal. eTeams online. So this one is applicable. It's similar to the client, only that for the online, it's a portal. You're using an app, but for the eTeams client, you're using a device. But they both handle those taxpayers with both goods and services. Then we have the virtual sales control units. For this, it enables you to integrate. You have an accounting system or an invoicing system at your business. You can integrate now so that you can issue an eTeams. Excuse me. Then we have the online involved in integrating the eTeams and the invoicing system that you are using, the accounting system that you have, maybe you're using QuickBooks, you want to integrate that with eTeams. So this one is applicable for you. The only difference we have between the virtual sales control unit and the online. For the online, the taxpayer is dealing with online invoicing system. So if you have not onboarded to eTeams, you need to consider which solution is applicable to your business. Or in this case, for the SACCOs, that activity that you have for the rental, you have farming, or any other trading, you review the solution which is applicable, then you do the registration. So we have some improvements under eTeams or development that have come along since we started onboarding for eTeams. So number one, we have self-onboarding. So initially, for you to register for eTeams, you are required to do that through KRA and they approve. But currently now, you can do that. We have the self-onboarding. KRA don't need to be involved in the registration process. So you just apply, then you receive a message that it was successful. So it is very efficient because you don't have to keep on visiting KRA to review the process where it is. Then you can use different eTeams solutions. We have talked about the different solutions that we have, the eTeams Lite, the eTeams Client, the eTeams Portal. You can use those different solutions at a given time, provided that a single invoice you produce from this solution, then the next one you provide from the other solution. But those invoices will have different invoices number, so they won't be similar. They'll be unique in a way so that they can differentiate the one that you have generated from eTeams Client and eTeams Online. On that point of the different eTeams solution, you can be able to issue a credit note, provided you have you are generating that credit note from the original solution that you are using. So if that invoice you produce from eTeams Online, for that credit note, you need to produce using the eTeams Online. So you cannot mingle them. So each invoice should be done under a separate solution. The other development is the reverse invoicing. The reverse invoicing is whereby, as a buyer, you are in a position to issue an invoice instead of the seller giving you that invoice. And in this case, we have those taxpayers in the informal sector. So you have purchased goods from them, but they are not in a position to generate an invoice for you. So as a buyer, and you have the eTeams, you can be in a position to generate that invoice. That's a purchase invoice. You generate that, and it will be transmitted to KRA. That's the reverse invoicing, because for the normal invoicing, the seller is the one who is supposed to generate the invoice. So those are the developments that have come up. So, and that's all for the eTeams. We move to the next item. We have the pitfalls and the success of a SACCO. So just like a normal business, even the SACCO, we have those factors that they promote their success, and also those factors that they hinder their success. Number one, we have strong governance. We see that the members in the SACCO, in the association, they have the responsibility for the decision making. But apart from that, there should be a governance that is taking charge. We should be having leaders in that SACCO. So having a strong governance will promote to the success of the SACCO. We have member engagement. Make sure that the members are fully engaged in the operation of the society. Innovation. Innovation is also there at the aspect. So innovation is a great key to success. Make sure that you invest in innovation in your SACCO. We have proper delinquency management. So proper management to ensure that for example, in the SACCOs that we grant loans, there is proper management to facilitate the repayment of these loans. Then we have effective risk management. We talked on the different risks that a SACCO will face. So once you have identified that the association or the SACCO is facing this risk, how are you in a position to manage that? So effective risk management strategies will promote to the success of the SACCO. We have strong saving culture to expand the capital base of the SACCO. We talked about the economic participation, whereby we say that the members are the ones that are responsible in the contribution of the capital in that SACCO. So we encourage the members to save more so that we can have a wider capital base. Then we have regulatory compliance. We have different rules and regulations governing the operations of the SACCO. So we need to comply with those regulations. The same way that we are expected to comply to the taxation, even for the rules and regulations governing the SACCO. Under the pitfall or basically we can say the factors that hinder the success of the SACCO. We have the pressure to expand and pressure to give dividends. So at the end of the period, you want to give higher dividends to your members than the level in which the capital, or rather the amount in the SACCO can manage. So pressure to give more dividends to the members, it will promote to the failure of that SACCO. We also have changing market dynamics. So markets keep on changing, even for the normal products and services. So those are changing market dynamic. They need to be monitored in case there is any change. Find out the strategies on how to navigate in that dynamic so that you can promote the success of the association. Exit of senior citizen membership. If all those senior membership in the members have exited the SACCO and we are left with the current or the latest ones, it's also a challenge because you can find that most of the rules and guidelines or policies, they were developed by the initial members. So the new ones can invest in developing new policies that can promote the failure of that SACCO. We have subjective lending model, detachment that decreases the deposits. So in this case, the deposits, the savings, they are the ones that are forming a wider capital base, and that's what we need for the success of this association. So when we retrench or we get rid of our members, so we're also decreasing on the deposits, that's affecting the performance of the SACCO. We also have failure to repay loans on time. Members in the SACCO, they are getting loans, but paying back is a challenge. We have huge unpaid loans, so that one is also another factor leading to the failure of a SACCO. Non-compliance with the rules and regulation, poor governance, and lack of proper record keeping. So we talked about tax compliance, and we said one aspect of tax compliance is proper record keeping. So lack of that proper record keeping, it will lead to failure of that SACCO. So I hope we are together up to that point, and we can check on our next item is the audit triggers, because we are checking also on the KRA audits. So on the KRA audits, we have triggers that will attract KRA to audit this SACCO or this society. So number one is the non-filing or late filing of returns. So we have checked on the different obligations that we have, the pay as you earn, the income tax, or rather the corporation tax, and the VAT, the rental, and each obligation has a deadline. So non-filing and late filing, every month you're doing returns late, so it will trigger KRA to come and verify your records. Significant variation in amounts declared in returns, maybe for the pay as you earn. We find that the pay as you earn and the salary and wages expenditure at the end of the year, they are varying. They are not they are varying. You have a different amount than what is in the pay. That one will also trigger an audit. Third party information. A third party giving information to KRA about SACCO ABC. this is what is happening in there. They have different commercial activities happening, and they are not declaring that income. So third party information to KRA is also another trigger. Media attention on a company, in this case on a SACCO. So the media is giving so much attention to SACCO ABC. So KRA will be interested to know further what is happening in this SACCO, and they will come to audit too. Current or former employees giving out information to the authority. So all those members in that SACCO, the employees in that SACCO, in that association, giving out information to KRA will also trigger audit. They want to come and verify this information they are receiving from the employees or even the third party. How legit is it? And that one is an audit. So what do you need to do during an audit? So KRA want to audit SACCO ABC, and they have sent a letter to you of the intention to do an audit. What do you need to do? Number one, you have to understand the time frame given by KRA. Once they send that email, that letter with the intention, they want to audit the pay as you earn or the payroll or the income received in that period, they'll give you deadline. Provide this document by after 7 days or after 14 days. So understand the time frame given by KRA. Evaluate the information required by KRA. That information they are requesting in that letter, make sure that you have evaluated it properly to know the tax exposure in those records. Carry out a pre-audit compliance check. Before you give out the documents requested by KRA, you need to do a pre-audit compliance check to see the level of the tax exposure that you have. Because when KRA audit, they are finding out your non-compliance. It may lead to you paying taxes. So you need to do an audit so that you can be prepared. This is the tax implication that we have. How can we maneuver this? So it's necessary to have a pre-audit check. Have an opening meeting with KRA team so that you can better understand the activities they want to do. Assign a contact person from your finance team. So not every time KRA they want to communicate with the society or the SACCO, any person available is responding to them. That's not right. You need to have a specific person who will be in touch with the KRA. Resolve as many issues as possible during the audit process. So KRA this time they want to verify the income that you have received and declared. We have said that we do a pre-audit compliance check. During that pre-audit check, you see that you also have an issue with the payroll, the pay as you earn. So it's time that you need to address that issue, even if it was not part of the KRA, to avoid further audit happening. So make sure that any other issue that is arising during the audit process, you have resolved that. Ensure you receive an official letter of findings from the KRA. So after the audit process is over and you have come to this agreement, you need to pay this or there was no tax to pay, you need to have an official letter showing the findings and how you have closed that audit. Then the other action is to pay any taxes that are not in dispute. So at the completion of the audit, there are taxes that have arisen that you need to pay. Make sure that you have paid them on time. Then we have mistakes that we make during the audit process. So you have received that letter, you panic. That's a mistake. You should not panic. You should receive that letter, understand what they need, and respond to them promptly. Call or go to KRA in anger. That's also another mistake that have a discussion with them so that you can sort your issues. So when you go to them in anger, it will also trigger anger on their side. So that one is a mistake that you are doing on that side. Not consulting a tax advisor. We say that we need to engage a tax professional so that you can also do a good pre-audit compliance check. So failure to engage a tax advisor, it's a mistake. Assuming the letters of audit. So KRA keep on sending letters to you of the intention to do an audit, but you are assuming those letters. You are not responding to them. That one is a mistake. Not conducting a tax risk assessment before the compliance, the pre-compliance check that you need to do. So failure to do that is a mistake. You're not aware of the tax position of your company. So it's good that to make sure you do the pre-audit check. Then we have conversing. And most of us, we do that. Once you have an issue and you know someone in KRA, you give them something so that your issue can be solved. But maybe after a year or two, the person in charge of the account will be transferred. You get a new person and they want to audit you. So they won't factor in whatever you gave out in the previous period. They'll do a normal audit and demand taxes from you. So we should avoid doing those mistakes for a better audit process with KRA. So what is the role of the tax advisor? You have engaged a tax advisor or a tax professional. What's their role? Doing a periodic tax compliance check, interpreting the changes in tax. Taxes are changing every now and then. It's the role of the advisor to make sure that they interpret those to the taxpayers, because most of the taxpayers are not aware of the changes. Even they do not understand what is expected of them. So as a tax advisor, it's your responsibility to do that. Conducting a tax risk assessment before the audit. Being available during the audit. You have engaged LWK Africa during the KRA audits. It's their role to be there. Actually, you as a taxpayer, you shouldn't be active. It's them to handle the issue with KRA. Ensure successful closure of the audit with fair assessment. So the tax advisor in this case, he's taking the position of recommender between the taxpayer and KRA. So it's also their responsibility to ensure whatever you have been charged, the tax that you have been charged, it has been done fairly so that you cannot be affected. Help to resolve any tax dispute. Any tax dispute that you have with KRA is the role of the tax professional to assist in resolving that. Tax training to enhance operation for different organizations. Then we have the tax planning. So those are the major roles of a tax professional. So in your organization, in your society, for you to have a better tax understanding and also tax compliance, you need to engage a tax professional. The other items is the resolving tax disputes. So resolving tax disputes, I believe we are still together, and we are getting responses to the questions we are raising in the chat box. So we check on the resolving the tax disputes. So how does tax dispute happen? It begins once you receive a tax decision from KRA. So KRA, they have audited you and they have issued a tax decision. So that's where the tax dispute begins. So what do you need to do? So if that decision, you are not agreeing to it, you need to object to the commissioner, and you should do that within 60 days. So after you have done the objection, the commissioner will review and issue a decision on that objection. They can accept that objection or they reject. They will issue a decision to you. And if you're not satisfied as a taxpayer with that decision they have given you, they can appeal that to the TAT, that is the Tax Appeal Tribunal. In the Tax Appeal Tribunal, you're trying to solve this issue that you have. If it has not been solved there in the TAT, you have a right to appeal to the High Court. If the decision that you have been given in the TAT, you have not been satisfied as a taxpayer, you have a right to appeal to the High Court. After that, you can use the ADR mechanism. That is the alternative dispute resolution mechanism, so that you can solve the tax issue at hand with the commissioner. So that's the tax dispute process, and we can check it. So we have the KRA audit process. You have received an email from KRA of the intention to audit your company for the period of 5 years. That is from 2020 to date. So once you receive the letter, they have the document that they need from you. You provide to them so that they can be in a position to do that audit. So the audit is done after the provision of the document. From that audit, KRA will determine, is this taxpayer liable to pay tax? If the taxpayer is liable to pay tax resulting from non-compliance, they'll issue a demand, a tax demand to the taxpayer, and they give out their reasons. There was non-compliance. Maybe you underdeclared your sales in the VAT. You underdeclared the salaries in the pay as you earn. So they issue that tax demand to you. So once you have reviewed that tax demand, if you're not satisfied with it, or you feel that the information that they have provided is not actual, you need to object. So you object to that demand to the TAT. So you write an objection giving the reason for your objection. After objection, you have the period will take within 60 days. KRA should have reviewed your objection, the reasons that you have given, the support documents that you have provided, and they have to issue an objection decision. Was it accepted or rejected? If maybe it was accepted, what do you need to do? You need to amend the returns and declare the right thing. Or if it was rejected, are you satisfied with that objection decision you have received? If not, you have another 30 days so that you can appeal to the tribunal, the tax appeal tribunal. So after 30 days, within 30 days, you need to appeal to the tribunal. So at the tribunal, they want to review this issue afresh. So they will request you to provide documents to them. So you need to provide all those documents for them to review. So within 14 days, you review the document, you can proceed to the High Court if you're not satisfied with the feedback from the TAT. If not the High Court, you can move to the Alternative Dispute Resolution, the ADR. So under the ADR, we're trying to come up with an amicable solution on that issue between the KRA and the taxpayer. So ADR, that's an alternative dispute mechanism, not through the court process. So if you use from the TAT, you never went to the ADR, you went to appeal to the High Court. After the High Court, after the decision has been issued to you, you have another 30 days to appeal to the Court of Appeal if you were not satisfied with the decision from the High Court. So basically that's the tax audits and the appeal process with KRA. The next item, and it is our last topic for today, it is the emerging issues in taxation. So we have different issues that have been emerging. We have number one, tax amnesty. So the tax amnesty was extended to cover the returns for up to December 2020. To cover the return period for December 2023. If you have any arrears up to December 2023, you can apply for the amnesty, and we have up to 30th June 2025. This year, by that year, you should have applied for the amnesty so that you can get waiver on the penalties and the interest. But for you to get the amnesty, you need to pay the principal taxes. Then we have the reverse invoicing. We have talked about that in the eatings. So the reverse invoicing is whereby the buyer will be in a position to issue an invoice and transmit that to KRA instead of the seller. Then we have changes in the NSSF contribution. So starting February 2025, there were changes in the NSSF contribution. I'm sure from our pay slips for February, we observed that. So NSSF increased the threshold. The rate still remains to be 6% for the employer and 6% for the employee. But the threshold increased from that 6,000 to 72,000. So that change, it affected the deduction, our deductions. So it will affect the tax in this way. When doing the pay as you earn, then NSSF contribution is allowable. it is not taxable. So it is deducted before you achieve the taxable income. So that's why the NSSF is appearing here under the taxation. Then we have some changes in the pay as you earn. We have the SHIF, housing levy, they became allowable. So initially we were just adding the pension contribution in the NSSF, but currently we have the SHIF and the housing levy is allowable. They are not subjected to taxation. We have increased pension contribution from 240,000 to 360,000 annually. So per month it's from 20 to 30,000. So for the pension contribution, it's not taxable, it's allowable, but up to 30,000 per month. Then mortgage interest deduction, it was raised to 360 per annum, that is 30. Initially it was 25. So it's also not subjected to deduction, but up to that limit, that is per month. We have free meals and non-cash benefits. So the meals that were being provided by the employer, they have a limit of 60,000 per annum. That is 5,000 per month. So a meal worth 5,000 is not subjected to taxation. But above that, the value above the 5,000 per month is subjected to taxation. And this will, when you're filing the pay as you, this consider all these changes that are happening: the NSSF, the SHIF, housing levy, pension contribution, mortgage interest, and the meals and non-cash benefits. Then we have the housing levy in the informal sector. So the housing levy, where we are being deducted the housing levy, those of us we are employed, 1.5% of our income is being deducted for affordable housing levy, and the employer contributes the same, the 1.5. But those in the informal sector, they are not employed, so they are not being deducted by at the point of receiving the salary. But KRA expect you at the end of the month, any income that you are receiving, even from the informal sector, it should be subjected to 1.5% of the housing levy and paid to KRA. So make sure even if you are in the informal sector, you comply and pay the housing levy. So that's the training today for the webinar. But before we close, we have some demonstration that we want to do for our accounting software. We have an accounting software in-house developed. It's called My Accurate Books. So we are going to demonstrate that. So maybe 10 to 15 minutes. We can have my colleague demonstrating that. So we have upcoming events. On Friday, we have a webinar on bookkeeping practices to save on tax. That is this Friday, 21st March, from 10 to 12. Make sure you join us to learn more with Dr. Regina. Then on Saturday, the 22nd, we have a skill up mentorship program. Those who have been together with us, you're aware that we have that skill up mentorship, whereby we have a free training. We bring a trainer and train on making different products. So on this Saturday, we have that event, and the training will involve the bar soap, dishwashing paste, powder soap, and care certification training. It will take place at Westmill Concrete, opposite Mangu High School, along the so I believe if not on events, so that one is a free training and you're welcome to attend. Then we have a breakfast meeting. Those people in the export business, if you are there and you are in the export business, we have a breakfast meeting on 24th April, and the charges will be 5,000. So make sure that you can early so that you can join us. The venue will be Expressway Lodge next to Imara Mall, Mombasa Road. So that one is for those people in the export businesses, and we are charging 5,000. It's a breakfast meeting. Come, learn as we network with other people. Then we have a masterclass. We have audit and bookkeeping masterclass from 12 to 23rd May. So from 12 to the 16th, we'll be covering the audit masterclass. Then dates 19 to 23rd May will be covering the bookkeeping, and charges will be 15,000 if you are taking both classes. But if you're taking one class, it will be 10,000 each. So, and currently we have taxation. It will be ending on Tuesday. On May, for the audit and the bookkeeping class to us for early booking. We have our services at LWK Africa. We offer audit services. We have bookkeeping services and the tax services. So any service that would be interested to get from us under the audit, bookkeeping, internal audit, we offer that. You can reach to us for that. So you can communicate to us through our office number or through our email, and we're going to assist you in that. So I can give this chance to the software department to demonstrate that. And in case you want to reach to us, even physically, our office is located at Nairobi. So along Westlands Road, gate 83, that's where we are. So you can visit us anytime from Monday to Friday, 8 to 5. So that's where we are located. So kindly let's give our software team 10 to 15 minutes so that they can demonstrate that to us.
Good morning, guys. Hope you are all well. This is David. I want you to take through our application called My Accurate Books. Basically, what My Accurate Book is about an application that can help you in bookkeeping. It's a simple application that can be used by anyone who has no accounting skills. It's a cloud-based accounting solution for businesses, and it has various features. It's a user-friendly interface, easy to navigate. Also, it has an automated bookkeeping. It can be able to track income, expense, and also your taxes. Also can help you in financial reporting, that is generating your profit and loss, balance sheet, and also your cash flows. It also has a multi-device access. You can be able to access it through the web and also your phone and also your computer. Also, it has integration with the bank and also M-Pesa. So it's already on Play Store, and also you can be able to access it through the web. When you go to the Play Store, you only search My Accurate Books. As you can see on my screen, that's the way it works, and you can be able to download. And registration is simple. Just go and be able to put your business names, location, and also your current client. And also be able to upload your logo that will appear on your invoices. So you can, after that, you will be able to log into your account. Okay, the moment you log into your account, that will appear on your web and also on your mobile phone. It has a dashboard that shows the items. The items is where you input your inventory. Also, it has the point of sale that the sales, which contains quotation, invoices, receipts, credit notes, and also can be for invoices. Then you can be able to place orders, purchase, also debit notes, can be able to input your suppliers and also be able to track the payments to the suppliers. So we have the expenses option interface where you can your business incurs in a day or every month, so that you can be able to track your profit and loss. It also has an option where you can be able to create a database for all of your customers. So that when you are creating the invoice or a receipt, it's easy to on your database. And also there is the walk-in customers, you can be able to invoice them. Most of you I know you have businesses, so this application can really help you in your bookkeeping and also record keeping for KRA. This month we are going on integration with KRA, that is eTIMS. So it will be better if your business is it can incorporate this application. The application has a monthly charge of 500 shillings per month, but for now, for the first 2 weeks, we give you a free access to all the application and also the point of sale for 14 days. Then after that, you can be able to upgrade. Upgrading, you just go and click the upgrade option on the website, and we have 3 packages. There is the free package that is running for 14 days when you download the application and start using. Then on a monthly charge, we charge 500. With the 500, you'll have all access to all the features, the purchase, charts of accounts, and also your full report and M-Pesa integration. And also we have the gold package with all the features, custom integration, also payroll management, petty cash management, and also full support. In case there is any issue, the payment can be made in quarterly and also yearly. Basically, when you pay quarterly and yearly, there is a discount which we will be able to receive. So when you go to Play Store, you can be able to access the application, download, register. Then we will give you a call to understand how you have been able to navigate through the application, and also take you through a demo which we usually run every Friday to enable you to understand the application and incorporate it into a business better. So basically, when you go to the application, that is now when you are registered, able to register your organization, that is the business. You started the application. The landing page when you open the application. Just a moment. Okay. When you open the application, when you start using it, the application, this will be the landing phase on the dashboard. You can be able to track the sales for that particular month, and also the expenses that you incur, and also the purchases, and be able to give you an overview of your business, that is the profit and loss. It also can give you a graph to see the performance of your weekly sales. Also, it has an options of there is an update that is coming soon, that is a user management. You can be able to incorporate different branches. That is like a customer who has 5 businesses that he runs. You can be able to incorporate them as one business, but under different branches. On profit, On reports, this application can give you your inventory, can give you your profit and loss, can give you your debtors report and also your credit reports and sales reports. And also on customers, you can be able to have your CRM of your customers. You can see the customers on the database. So it should be easier to contact your customers. That is on the reports. On expenses, now here is where you can input all your expenses. You can be able to track your expenses, the ones you have paid, the ones which are still pending. Basically, this app is very simple to use. When you get started about the app, it will be able to reduce a lot of paperwork on your site. You have all the inventory, the application, and also the purchases, orders. So I guess you can, if there is any question, you can just ask and I will be able to take you through. And also, you can join our demo that we usually run every Friday at 11 p.m. to 11 a.m. to 11:30. Just a 30 minutes demo every Friday to take you through on how to go about the application. Okay, I'm sorry, I can see someone said the screen was hanging. Okay, what you can do is just, you can text me your contacts and we can be able to send you a link that you can be able to join on Friday. We can take you through a demo and how to go about the application and also how to navigate through application. This Friday, I will send you the link. Yeah, this Friday at 11:30 a.m., 11 to 11:30 a.m. That is Abraham who had asked about the link, and I will send you the link. The demo we usually run is between 11 to 11:30 every Friday, 11 to 11:30. Okay, if there is no other question, you can just register on the Google form and I will be able to get back to you, send you a link for the Friday demo. And I appreciate if you all come, understand about the application, how to navigate it, and how to incorporate it into your business.
So that brings us to the end of our demonstration. But if you have any question, you can liaise with our team and they respond to you. So we can plan on attending the next masterclass, the next webinar, that is Friday. Apologies for that. Friday. We are going to share the link before then, purpose to attend so that we can learn together. So thank you very much for attending today's webinar. And in case of any question, you can contact us for further clarification using our numbers. Thank you very much, and let's meet on Friday.